Hi everyone, this is Shireen Purewal, and in today's video, I'm going to talk to you guys about non-residents owning real estate and the taxes that are involved in the whole process. All right, so what I'm going to tell you is I've dealt with a lot of non-residents, so I know how to actually file the non-resident taxes as well. But how it works is basically when you're a Canadian citizen and you live abroad and you own real estate here in British Columbia, Victoria, or you are out of the country for more than 6 months, which makes you a non-resident, what do you do? And how do you deal with your rental properties or your properties that are here? Now, if it's a rental property, you have to file what we call, you know how everyone else, I'm going to put in simple language, how everyone else fills out their T1 general, their normal taxes. The one that's for the non-resident is called the Section 216. So the regular people file the T1 general, the non-residents file the Section 216 is what it's called. All right, so let's be clear on that front. Now, when it comes to rental properties, there's another form that they have to fill out. I actually have the name. I'll look it up, or if you email me, I'll give you the details on it. Now, I'll walk you through the steps. Accountants used to confuse me. Reading online used to confuse me. So I've broken it down to a really manageable, simple way of dealing with non-resident taxes and rental income. So basically, suppose you get $10,000 in rent for the year, okay? 25% of that you have to pay up front to CRA, or else you get penalized interest for not. So what they want is they want non-residents to pay up their taxes, 25% of the rent up front. Then when you file it, whatever your taxes are that you owe, you pay them. And then the balance of that 25%, they'll give it back to you. That's essentially how it works. Now that whole 25%, and where do you send that money? So there's two departments. There's a department that deals with the Section 216 where you file your tax. And then there's the non-resident department, which deals with your real estate. For every property that you have an NR account. So you have an account for property A, NR, you have to open that account. And you send the 25% for each property to its own NR account. Don't just throw the money in one NR account and think it's going to be distributed to the others. No. What will happen is there'll be tax consequences, and interest penalties for non-residents are not cheap. So please make sure, again, please, disclaimer, I'm not an accountant, but I've had so much stress dealing with this non-residents nonsense. I thought I'd deal with not nonsense, but just stress. Let me leave it at that. You do have to pay it, and you're obligated to pay it. And actually, non-resident taxes are flat 25%, whereas with us, if we're in higher tax brackets, it goes up to 50%. So non-residents don't get a bad deal, but they also don't get the advantage of the free healthcare and free public infrastructure here to a certain limit. But anyways, let's go back. I totally sidetracked there. Okay, back here. So for every property, you've got the NR account, and you have to pay the 25% upfront to each one. Suppose you don't know how much rent you're going to collect, or if you're going to increase the rent. What I advise doing is pay whatever you think it will be, like just amount, and then the increment at the end of the year, when you're filing your taxes and you know exactly how much rent you pay the difference back to them. And if there's a small interest, they will, or if you overpay, they'll give a credit back to you, and you will have no interest charge. Okay, but they want to withhold that amount. So let's be clear on that. Then what you do is you have to, when you're checking your accounts at the end of the year, you have to request the NR from them before you file your Section 216. So you say, hey, I gave you this much for the year. Listen, this was how much rent I actually collected for the year. Can you issue me the NR slip? Then they issue a form that says, yes, you did withhold this much with us. Now file your Section 216 with that slip so they can give you the balance back. Really, in simple terms, that's how non-resident and rental income taxes work. Hopefully this was helpful for you. Don't confuse non-resident with foreign buyer, because I have non-resident Canadians who are like, do I have to pay the foreign buyer tax? No. Don't confuse the two. Just because you're Canadian that lives abroad doesn't make you a foreigner. You're a non-resident. A foreigner is someone who does not have a Canadian passport, does not have Canadian permanent residency, has nothing for Canada. Okay, that is a foreigner. Okay, now recently with foreigners, even they've passed all these exemptions. So a foreigner now can get land and build on it. A foreigner now, which is okay, because I guess what they've identified is, whoa, our economy is really slowing. We need this to move or develop, and we need some of that foreign investment money to come in for these projects. It's just the housing supply we can slow down and have them not buy into, but developing, let's bring that money in and develop. So they can buy land, they can build homes, certain commercial properties they can buy. There's quite a few exemptions there. So more questions, email me info@bchomegroup.ca. Follow and subscribe. Whenever I have tips, I'll share them with you. There's also the housing tax as well. I'm going to speak about that in another video, and financial tips that I can give you on saving money and investing in this market and what's the right thing to do. We're going to talk about the hyperinflation that I think is coming with all this bailing out of banks in the USA. Our currency is pegged against the US dollar, so it's going to affect our currency too. And inflation is coming. I know they're saying it's dropping. Based on what I'm seeing, it's always, if you look at the cost of milk, it's been always upward trending. We're going to hit a tsunami of inflation is what they're saying. Now, I don't know if it's that extreme, but just know over and over again, when milk prices have gone up, real estate prices have gone up. It's a hedge against inflation. It is. What do I suggest hedging into and how to hedge? There's a technique. There's a way. Let's talk. I'll update you. Like and subscribe, and we'll get through there. Love you guys. Thanks for following and watching. Appreciate you, and I appreciate your questions and your support. Take care, guys. Bye.